Let's go over to Chris Conway from the Australian Stock Report now to get a gauge on market performance live from our Melbourne studio. Welcome to you. Good leads from the street. That much is clear. From the companies, though, that have been out this morning, any kind of a theme that you're across, that you're cognizant of, that you're eyeing with interest? What's jumping out at you?
No, nothing particularly from the companies this morning, Carson. Good morning to you both, Ingrid as well. I think the big question today is, is this a shift in the momentum of the market that everyone's been hoping for? Of course, we've seen quite a drastic sell-off from around 6,000 back into 54.50, I think it was yesterday. We've got great leads from the overnight session. Yields are starting to look good again. Valuations are starting to look attractive. And we know that the Aussie market is a momentum market, evidenced by the fact that we had 6 losing sessions in a row. So the broader theme is, is the momentum shifting? And will it be enough from what we've seen to coax some of those longer-term investors back into the market and see a sustained rally? That's really the big question on everyone's lips, I think.
Chris, last week you were calling for 5,400. We weren't too far off it in truth. I mean, in terms of where we got to at our lows, but are you still expecting us to potentially get lower from here?
Again, the million-dollar question. Ingrid, you asked me a couple of weeks ago what I thought would change at 5,400. It was a really good question, and the response then was, I think that's the point at which valuations come back to what I would call reasonable levels, and some of the yields, again, something that Carson spoke about last week, some of the yields on the bigger stocks like the banks and Telstra start to look particularly compelling, and that's indeed what we're seeing. I wouldn't be surprised. I'm very hesitant to call the bottom of a market, but I wouldn't be surprised for this to be today, or on the back of the lead from overnight, for this to be an important inflection point for the market, and we might see a sustained move higher. We might, over due course, eventually get back to 5,400, but I think the risk is to the upside now for the Aussie market.
What to your mind has been that catalyst? It can't simply be aping Wall Street. There's got to be something more fundamental.
So again, valuations
just simply that re-rate.
And yields. Yeah, and yields as well. I mean, looking at some of the grossed up yields on NAB, for example, that's at 9%. I think Telstra and Wesfarmers are around 7.5%. They're really compelling. They are really compelling yields. And again, Carson, you made the point last week that you can put your money in the bank and get 3% minus inflation, which is 0, or you can start having a look at some of these stocks that all of a sudden starting to look particularly attractive. So I think it's that change in fundamental valuations, or the re-rating, as you mentioned, and the fact that there's probably no better place to park your money now that the market has come off significantly.
Yeah, so gold's what you're liking at the moment. Linked to the US story, of course. What are some of the stocks in the gold space, though, that you're seeing good value in right now?
So Evolution Mining is one. Obviously, they recently bought the Cow mine in WA, and I think adding that production into their existing production, that makes them the second largest producer by production, behind Newcrest, I believe it is, and also Medusa Mining is another one that we particularly like. The stories are fairly similar there. They have little to no debt. They have some of the better margins in the industry. And again, as you mentioned, we like gold because of the inflation story in the US. We've seen 4 consecutive positive prints of core inflation. And I think that is a story that's just starting to take off. And again, when inflation arrives, it tends to arrive very quickly rather than slowly. So early adopters could benefit from adding some gold stocks to the portfolio.
Have you got a sense as to any Chinese connection as well that might be welcomed or might be resisted on registers in that same sector moving forward, in terms of a Chinese vested interest in ramping up its ownership of these assets? Who looks as if they might, because this is the chat around Fortescue, for instance, but I'm wondering also in gold. Is that a welcome development as we move forward?
Yeah, interesting question, Carson. I actually haven't heard anything, but it's not surprising. The Chinese obviously are willing to invest in iron ore, coal. They've been big investors in, so it's not surprising that they're sniffing around the gold space, and they love a bargain, and rightly so. We've seen interest in the iron ore space because that's been beaten down recently. Gold hasn't been beaten down quite so badly, but again, it probably offers compelling valuation. So again, I haven't heard anything, but not surprising to hear that.
We're watching the grocers as well. Obviously, Woolworths after yesterday announcing that sort of restructure, and Metcash as well with this plan to sell off its auto division. You're hearing rumours as well that Metcash could attempt to purchase Harris Farm. Well, how does this play into the broader grocer story? Both those stocks are weaker today against a stronger market.
Yeah, well, in terms of Woolworths, their moves yesterday to invest, I think it was $500 million in their operations down here in Victoria, I think is a welcome investment. You know, the difference between Woolworths and I guess Metcash is Woolworths have the money to do something like that at the moment, whereas, as we all know, with Metcash, they're trying to divest assets to pay down their debt and get a handle on their balance sheet. So yeah, in terms of the Harris Farm move, the rumours that I've heard is that it's a preemptive move to fend off rivals. I don't think that's a particularly good reason for purchasing an asset, simply to fend off rivals. If they can get it at the right price and it's accretive enough, then obviously it'll be a worthwhile deal. But to merely fend off rivals, I think it highlights just how lost Metcash are at the moment. I've heard some other analysts this morning talking about the fact that they don't have a plan. They haven't put out a plan to the market. They seem to be lurching from one idea or one rumour to the next without any meaningful direction. So yeah, it's troubling times for Metcash. Again, we had a vibrant discussion about this last week, and it's just not a stock that I could be advising my clients to be interested in at this point in time.
What's your view, just back on Wally's, DB saying today there's not yet been a evidence of a cultural shift inside the company, by which they are, the point they're getting at is that, you know, if you are going to be all about value and increased focus on the customer, you have to communicate to the customer when you are delivering on certain milestones, and even in store, that it can't just be an assumption you make, that they're not making those kinds of connections with customer, like say a Coles model's proved very adept at. Is that a fair call? Would you wait until you see more evidence of it before you go and accumulate more?
Yeah, look, I think it is a fair call, Carson, and I think it's evidenced by the fact that they have been a bit reluctant to admit that they're getting beaten up pretty badly by Coles. Coles, you know, over the last 10 years, Woolworths has probably been, of course up until recently, Woolworths has probably been the better performer. But Coles has come along in leaps and bounds. They've beat them at price point, they've beat them on range. And yeah, I think there's been a reluctance from Woolworths to admit that they've fallen so far behind. So yeah, you're exactly right. I think they need to communicate that with clients. They've obviously started their marketing campaign with the cheap ads, regardless of what anyone thinks about that sort of advertising. They're trying to compete in that space. But yeah, I think they do need to get out in front of it. They need to tell clients what they're doing and encourage people to come back into their stores. I mean, again, a discussion we had last week, the Australian consumer at the moment is so discerning about how they spend their money. They want to hear from these big companies. They want to believe that they're getting value. And a good point, I don't think Woolworths have delivered on that message as of yet.
Okay, so still jury out from your perspective. Chris, as always, thank you so much. Appreciate it.
Thanks, guys.
Chris Conway there from